we go. Okay, charting and training for September 28th. We're going to close out this month strong. How did we do this week? Did everybody do okay this week? Like, were we all profitable? And if we weren't, did we identify the areas? Let's talk about it a little bit. Let's talk about our week and our month so far. Kind of stuff we got going.
I was profitable. I'm still trying to figure out, I think I swim, but I think I made like a little over 400, but I'm still trying to calculate my totals, which is good because
Yeah,
that's 3 weeks green in a row.
yeah,
That's
yeah.
not bad.
Not bad at all. Not bad at all. Yeah. So when the best thing to do, I have not figured out, and maybe somebody can help me. I've not figured out how to do that on the desktop, on the computer app. I can only figure out my stuff on my phone. So when I go to my phone at the bottom where you pick more, I think it's more, I'll go under orders, and under orders I pick all. So when you're under orders, you pick all, and then it'll tell you what trades you did. Now I have to go through and like manual, if I don't keep up with it, I have to manually write it out. And then I'll do it that way. I can do it either by stock, or I can just let them all be there like for the date or whatever and keep up with them that way. And I know there's a way, and I've seen it on the desktop or like on the app on the computer, but it doesn't lay it out. It shows like trade something. Actually, I have my Thinkorswim open. It shows like the trade log or something like that. But to me, it's not as straightforward as it is. Activity and positions, I think it is. It's to me, it's not as straightforward as it is on my phone. So, um, y'all might have other ways. The way on my phone, I know I can quickly go and scroll through and see. It means I gotta just scroll, look at it, but I can see it that way the best for me. But if somebody else wants to share how to get to it on the Thinkorswim computer app, I'm open to listen. Otherwise, I do it on my phone. That's to me the most straightforward way. No, nobody. Okay, cool. Um,
And all this, I was trying to find out, and maybe I should. What I've been doing is just taking screenshots at the end of the day
mhm.
of what my balance is, but that doesn't really tell me. That just tells me if I had a green day or a red day. It doesn't really
Yeah.
tell me what I executed on. But I won't hold you up. I'll
That's
look at.
not even, and that's not even accurate if you're doing the PDT hack, that's not even accurate because the PDT hack doesn't settle until in the middle of the night. So if you take your screenshot at the end of the day and you've done the PDT hack,
Yeah.
that's it. If you've done other things, it is accurate. But
Okay. Yeah. Yeah. At this account, this is a. I haven't done the PDP hack on this account because it's a trade
okay.
station account.
Yeah. Okay. Now Trade Station will should do, but I'm telling you, you better watch your money at Trade Station.
Yeah, man, the money is funny, but we gonna switch over. I'm just trying to double this account,
Yeah. Yeah.
and I would love to switch over once I get to that goal. You know what I
Oh,
mean?
cool. Yeah. Because I was in Trade Station and I had to keep checking behind Trade Station. And after a couple times of them messing up, I had to go back and tell them about my money. I was like, well, why should I have to keep up with my money for you? That's is what you have a whole computer system for this. I should not need to go line by line for trade by trade for you. I mean, this is all electronic. So after that happened twice, I finally was like, okay, I don't want to have to worry about this. So, yeah, there's that. But yes, you're doing the right thing. Keep your screenshots with them. I think that should work for you with TradeStation. Uh, Anybody else? How was your week? Pastor Will made some money. I saw that he's been using the Strat and was making some money. I saw that.
Yeah, did end of the day, yeah, I was close to the fire. So I did pretty good on that, but I had like a leap on QQQ and I was bleeding money, so I had to close that out. So
Okay.
kind of down $1,000 on the week, but I just had to cut my losses. That was in
Yeah.
redo capital. Then I had a OKLO. I had an option on that long
Mm-hmm.
call and Thinkorswim
Mm-hmm.
and forgot about it.
Oh,
Well,
That's
let me.
probably a good thing because didn't Aklo move a lot?
No, that was last week. That where I made 1,700, but I
Uh,
forgot I was at the nursing home visiting somebody. And let me check this. And I looked. I said, oh my goodness, I
oh my
I broke a
goodness.
rule and didn't check, so I'm down because of that. But I'm not too bad though. That's just for the week. Not too
Okay.
bad. So I mean, I'm very confident. But again,
Okay.
I am learning my mistakes, and I'm still working on the PDT hack. I'm still working on that too. So,
Yeah.
but I must say that I'm learning. I'm learning, and I'm really excited about the one day Russell 2000 IWM. That's you speaking my language. I'm like, oh,
Yeah. Yeah. I think y'all are gonna like that. I
I
think y'all are
can't
gonna like
wait.
that. Yeah.
So
I think you're gonna like it because it's strap based too. I think you're gonna like it.
I can't wait.
I
Yeah.
wanted to say I did execute on that PDT for the first time last week. I did it twice in
Okay.
a Thinker Swim account on
Uh-huh.
the web platform
Uh-huh.
because I'm trading from my work computer, so I can't have the desktop application installed.
Right.
And I can go to the
Uh-huh.
website, and that's what I've been doing. I've been going to
Okay.
the website, and I did it twice last week for profit. So
Oh,
one of my questions I had is what can I do to make those PDT orders fill quicker? They
nothing.
sit out there, nothing.
Well, one thing you can do is you can want less money. So
I see. Yeah, I saw
if you
that.
want less money, they'll fill faster. So if you want to hold it for like max or for more money, you guys got to wait for price to move. So
Right.
you'll see some people like Miss Marsha put hers up and it's like she's done two of them and she's done $70. That's because she's getting $35 in dip. So if the less money you want to take off of them, the quicker they feel.
For sure. So I can see in the web application, you can see where your order is compared to the last price.
Yeah.
There's a little bubble that kind of bounces around showing you last price. And I see that bubble hitting my limit,
Yep.
and it's still not filling.
Yep. Yep.
That's the okay, that's normal. Okay.
That's normal. Well, because remember, you're talking about a spread. So that's a good question. It's a spread. So basically what needs to happen is the price is moving around, but you've got two option
Yeah.
contracts that are
Yeah.
moving. And at some point they've got to get to you're saying, okay, I want this spread to be worth $4.50 or $4.80, let's say. And it's dancing around and it might be 465 and it's 470 and it's 485 and then it's coming back. It needs to lock your price and stay there long enough for both of them to pick up at the same time. So one might get to the right spot and the other one's still dancing around. So you need the sell leg and the buy leg to get to where the difference between these two is that 480 or whatever it is you're looking for. But if
Got you.
one is still dancing, then it's not gonna lock. So you basically have to wait.
Wait.
I've had to be like a 4.95 and the price is at $5. Is that 4.95? Is that $5? Is that for you like you should be feeling right now and it's just hasn't. So you just have to know that
Understood.
that's the way it goes. Yeah, that's the way it goes. Yeah, that's just the way it goes. Cool, cool. What other questions? Do other Q&A questions do we have? Any other Q&A?
Man,
Clarifications?
I did take a trade and I was in the trade and I had a stop set. I got
Mm-hmm.
this from the internet, so I don't know if this is normal practice, but if I receive, let's say I received 25 cents on a 1 point wide spread. So unless I'm
Okay.
trading XSP,
Okay.
so a 25 point credit or
Mm-hmm.
25-cent credit, I've
Yep.
been setting my stop at three times that.
Okay.
So at 0.75,
Okay.
stop market. I had a stop get hit in one account
Mm-hmm.
and on another account, because I had ran out of day trades, I couldn't afford to even put a stop. So I just let
Okay.
it, I was gonna have to take the max loss, you know. So the one where I had a stop in place, which is the Thinkorswim account, it stopped me out and I incurred, you know, I think the difference is $50 times.
Yeah.
It was a big
Whatever number
loss.
of contracts.
Yeah.
Yeah.
On the other one, I didn't stop out and I was way down on the position, but the stock rebounded. And this was September 25th.
Okay.
And when I tell you that it put in the stock put in a hammer on the 15-minute and it just went up and it went up past both legs and I got max profit on that trade.
Right.
So it made me stop and think like, is my stop too tight or is that the right? So I just kind of wanted your input as to how do you manage a
Yeah.
trade when you stop? When do you stop when you get breached on both legs or?
So there's two pieces to this. One of them is you may have heard me say it, or you may have seen what I've written where I've said don't use the money as your stop thing, but use the chart as the thing that is your stop. And the reason I say that, or is because you can be in a trade and it can be down because we've been in SPX before and SPX is down, but the chart is showing you, or the things that you're looking at are showing you that it's going to rebound or that it could potentially rebound, right? And if you just give it the time, it may come back through, because really what your trade, the trade is good all the way, or it's good or not good all the way up until expiration. Expiration time is when you need it to be one thing or the other. It can do all the dancing all day long. It can go wherever, price can go wherever it wants to go all day or all week if you're in a weekly. What really matters is expiration time. So you're looking to see where will price be at expiration. So a three times your received premium is a good stop loss. That's not a bad stop loss, because generally if a stock gets to where it's worth, if you took in $25 and it gets to where it's worth $75, it's probably fully breached.
Yeah,
So it probably is, and it's probably good to close it. So that if it gets that far, in the money, it's in most cases it's good to close it.
got you.
So, but in addition, um, if you're looking at the chart and you can see that that the charting looks like that it's going to hit a moving average, it's kind of coming to a VWAP, some catalyst could potentially move it, then you might want to give it the time to see if it recovers. But
Absolutely.
that those two things are kind of um it really comes down to it's kind of a situational thing. I think you do need to have a plan. What does your trading plan say? Does your trading plan say if I get to three times my received premiums, I'm gonna
Yeah.
go? You need to follow that plan, because more times than not, that's gonna save you.
Okay.
But in addition, you're gonna say, okay, I'm gonna if the price gets to my short leg, I'm gonna use an alert, and that alert is going to alert me to go look. So
There
maybe
it is.
you use the alert to go look, and then when you go look at it, you go look and say, okay, this isn't gonna recover, or this looks bad, let me go and close it, or this looks like it might be okay, let me just keep an eye on it.
For sure.
So those are the two options. Maybe you do put the stop and you just let that be automated, or you put the alert on and let the alert be what makes you go to assess the situation.
Thank you for that.
Yeah, you're welcome. You're welcome. Cool, cool. I think we've had some profits this week. That is so good to hear. We September has been a good rebound month for us, for all of us, me included, because August was not good. August was not. August was our, I would say our cover. August was our, I don't even call it a wake up call. August was just, it was August. It was August. It was August. It started, the first day of August went south, and it just didn't get any better for me. It didn't get better. All right. So what other questions do we have? Do we have any more questions? Any more Q&A? I want to make sure that we answer all the Q&As if we have some questions from some mechanics questions. What do we see when we look at blankety blank? What do you think, Arlissa? Yada yada. What else do we have anything else?
I saw your video on, which I think is the homework for this call around the one DTE, how to pick your strikes concerning the VWAP and then also the MMM. It was like some math involved with adding the MMM to. No,
Yeah.
I'm just excited to hear you go through that, or if this is the call for that.
Yeah, well, that VWAP, somebody asked about VWAP, so I put that video there for that. The one DTE thing we can talk about one DTE on SPX, and I want to talk about one DTE for IWM.
Right.
hmm Have y'all been doing the one DTE on SPX? Have you all been trading those?
Yes.
Well, yes.
I look forward for you to put them out. I sure do.
I try. Sorry,
We
go
were
ahead.
scared. We used to be scared of those. Well, I was scared of one because my zero DTEs were all doing fine, and my one DTE was where I was losing money, and then I had to continue to fine tune my little strategy. So it's
Oh,
been
so
doing better this week.
the one DTE is a new thing then. Is
It's
it a
not
new
new.
thing?
It's old. It's old.
Okay.
It's just it's continued to be refined along the way.
Okay. Okay. I tried that. I think I messaged you the morning. I tried the IWM one. It might have been one DTE that when you put in, and the next day I said, "Man, this thing gapped down." And you
Yeah.
said wait till noon, and I didn't even read that message in time. I said my money is running from me. So
You would go.
I closed that thing, but I really wish I would have let it cook a little bit longer because the market,
Yeah.
I think it filled a gap and it was starting to turn around.
Yeah, that's one thing I want to talk about with those one DTEs too. Now that we're on that, is the one DTEs. I try, and it's not always easy, but I try not to do anything, not to close them at a loss before 10 o'clock. Now, if I'm closing them in profit, like if they ready at the $5, $10 mark, I'm closing them mugs at $5 and $10. If I can close them at max profit almost, they can close between 9:30 and 10 o'clock. But if 9:30 or 10 o'clock they're at a loss and I can see that they might recover back, I really try to give them the room between. I try not to do anything to them in the loss category until at least 10:30, because by 10:30 the market, if it's gone one way, it's probably going to reverse by then. You're going to kind of get a better idea of what the market direction is by 10:30. And if you move at 9:35, because you were saying, Avery, it gapped down like, oh no. But if you wait and give it about the 30 minutes, maybe an hour, to see, you still got some time. I mean, we see theta doesn't start eating on that really bad until like noonish. So if you give those a little time to see what is price actually going to do, you got it, and if you see, again, follow, always, 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 if you've got a trading plan that you put together, I want you to always follow your trading plan, whether I'm still holding something or not. If you have written a trading plan that says, if the price does blankety blank, I'm going to do blankety blank, you need to follow your trading plan. That's the reason why you wrote it. You write your trading plan when things are quiet, so that way you can execute it when things are noisy. Okay, and noisy is that inside noise. That says when the noisy is inside of you. It ain't noisy out here, it's noisy in here. All right, so you write it when you quiet in here, so you can execute when it's noisy in here. All right, because when your money is going bad, like Avery was saying, my money is slipping, that's when it's noisy. Okay, you want to execute what you wrote previously. But I'm saying I try to wait on those that are potentially breached or all the way breached. I try to wait on those a little bit for about 30 minutes, maybe 45 minutes, to see what is price actually doing before I hurry and close those at a loss. Um, that works out for me a lot of times. Sometimes, there's been times when I should have closed it in that window of time and didn't, and then I'm like, okay, now I got to scramble a little bit and make it work for me. But by and large, it does work that price, especially if it's on the put credit spread side, even the call credit spread side, because SPX might gap up, but it seems to stop and reverse. And if it gaps down, it hits something at the bottom and it reverses and goes back up. So we watched it enough now to know that SPX is going to go up and it's going to stop and come back. It's going to go down and it will stop and come back. Now the question is, how much will it come back, and is your trade too far away when it does? Okay. I use I use the VWAP. I look at the VWAP on there. I also have been using Delta. I look at Delta. I look at all the things that are on that video. I look at that plus minus number. I look at Delta. I also have recently added, I look at our strat numbers. I'm going to share. I look at our strat numbers to see what is the day candle looking like. What is the daily candle looking like before I enter for the next day? Okay, does that make sense? I'm looking on any given day. So let's say I would be looking at this. Let's say I was looking on Wednesday. And I'm looking on Wednesday for Thursday. Okay. Okay. So Wednesday would have been this. This is Wednesday. It means I don't have these things over here to see. I don't know what's happening. This hadn't happened yet. But I'm looking at the Wednesday candle. And the day's not over, but it's close to, I'm doing this at like 3 o'clock in the afternoon. So by 2 or 3 o'clock in the afternoon, you got a good idea of what kind of day it was. Was it it's a red day and it's a 2 down. So a 2 down, thinking about a strat number, it was a 3, then a 2. Basically, this was a down day. So then you can say, okay, if we're looking from a strat standpoint, this was a 3-2, thinking about your combos. 3-2. So the next day, the most this is probably going to do is no higher than the high. I would look at what is the high. I'm probably going to do a call credit spread is what I'm looking at. But y'all know I love me a good iron condor. So I'm probably going to look for an iron condor. But um, I'm also looking like bearish. Bearish is like my primary lean is what I'm looking. I'm looking bearishly from here to there. I'm gonna tell you one more thing that I do. I also incorporate gamma. When we look at Magic 8 Ball, we can only see gamma for the day. And I gave everybody this. I'm going to give it to you again just in case you all want to be able to see, in case you want to see gamma on some other stocks, or you want to see gamma going forward on other stocks, or you want to see SPX more than today. Because I know when we're looking at SPX, we want to sometimes see more than 0 DTE. We want to see multiple days, that kind of thing. So I gave everybody a link, and I'll bring the link back to the bottom. There is no way inside of Magic 8 Ball to go and put in a command to see multiple days, but in here I gave us, I want to say it's this one. Yeah, the not financial advice one. I go here to the Gex stream spot. I want to say, was it Gex spot? Oh, maybe it's Gex stream. Is it Gex spot? I use this other one. I have two of them that I use. Actually, I use the other one more than this one, and they're both free. So I'm gonna go to the one I use because I know exactly where to go. Okay, so I'll make sure to give you the link to this. But I go to this free Discord, which if you got Magic 8 Ball or any Discord, you can use this. And I go to the one that says GexBot. Okay, I go to the one that says GexBot here. And then what you can do is, you put in the command Gex in. I'm typing at the bottom down here. Not sure if y'all can see me. SPX and then you put in 30 and 8. Now, why 30 and 8? I don't know. I want to say it's 30 strikes and then it gives you 8 days. You probably could ask for 5 days or some less amount of days, but it gives us the GEX for SPX and it's 30 strikes and then 8 days worth, right? So I take this information and then after I've looked at, now I take again where I got the plus minus number on multiple days, which I only want one DTE, so I want the next day. And I'm looking at the delta, check VWAP. So I'm just looking at a bunch of different information. I'm processing this stuff like just I'm not doing a whole bunch of like deep analysis. I'm checking and say, okay, plus minus says 35. Delta, I'm looking for like a delta 10. I'm looking for a delta 10. So I'm kind of looking at what strike area do we want to be at. I'm not overthinking it really. Okay, so don't feel like I've got some this huge massive formula that I'm using because I don't have. It's not. So I'm saying all that to say it's not something that you can't do. Okay, because you could. So now look at this. I take this chart though, after I've kind of looked at it for myself, I'll take this chart from here and I take this and I go talk to my friend Chad. Do y'all know who my friend Chad is? My friend Chad is Chat GPT.
Yes.
So I take this chart, I save this chart, and I give it to ChatGPT. And I stop and I say, this is the information basically for 8 days, because Chat can read all this without me telling him what it is. He can read the chart on his own. And then I say, I'm looking at these areas for strikes for tomorrow, 1 DTE. Do you agree with this based on this chart? And then ChatGPT rinses all the information I gave it and it spits back out and says, yes, your strikes are okay. Or it spits out and says, so and so strikes may be too close, it might be too far. Now, Chad gives me strikes that are far away. ChatGPT is not gonna have you all up too close to the fire. Chad he is not aggressive. He is not an aggressive trader. Okay. Chad will have me way out somewhere getting 10 cents for a trade. I'm like, okay, Chad, there is no money out there. But the reason I talk to ChatGPT is he can rinse this information right in front of y'all quicker than he can read all that, and then I'll give him what I'm looking at for strikes. But even if you're looking at this yourself, you can see that we got some strikes here. 6,700 is this one here. That's 6,700. So that's a big one looking for 8 DTE. And then 6,505. See, that would be like way too low, but that's a big number here. And then the put wall, 6,600 is a big put wall. So anything really beyond that is going to be okay. Anything beyond 6,600, 6,700 is probably okay too. Because remember, we're only doing 1 DTE. So it's not like we need a whole bunch of cushion. We're only going out 1 day. So you can really see that the bulk of what's happening is happening in here. And so if we go out beyond the bulk of what's happening, we're probably gonna be okay. Even if you wanted to go beyond this part here, if you wanted to go to like 65, 75, if you wanted to go a little bit further and you're going to go beyond 6,700 and go a little bit further, again, we're doing a 1 DTE. And I look to take in about $50 on each side. If I can get at least $50 per side, that's $100 total for a trade that all we're doing is waiting for the night. Just waiting for the night to expire. And the next morning, we going to close our trades off. If we can close them for $5 each, that means we got $90 we got to keep, and all we did was sleep. That's good. That's good stuff, right? That's good stuff. Now, when I go out 5 DTEs, I'm doing a little more in depth, because 5 DTEs means we're gonna ride those a little bit longer. So I need to be a little more in depth. That's why you only see me do those on Fridays, because I'm putting out Friday for next Friday, and I have to look a lot closer at what's happening to do a 5 DTE. A 1 DTE, I can kind of just get wide enough to make sure that we're kind of all right. But a 5 DTE, I got to get a little more involved. Okay, I know I said a lot. Did that make sense, everybody?
Yep, I think so.
Okay. All righty. I will give again, I will give the link to that. Also when you're here in this, let me close this. When you're here on this stream here, you could just literally do, let's say all you want, like y'all see me sometimes, I give y'all the gamma before the market opens. I type in, I'm down here at the bottom, I type in GEX and SPX. That's all I'll type in. Um, exclamation point GEX SPX, and it will give you the GEX, the gamma exposure for that wherever we are right now. You know, it'll give you that information right now. So let's say you wanted the gamma exposure for Apple. Let me put GEX in there. Let me type in the right stuff first. So you could, people do this all day long to see the gamma exposure for different things at any time. So this is all happening under the Gex spot, and there's other stuff here. Again, this whole Discord here is free. So if you want to get, for people who really like to get deep into the all the data and stuff like that, you can. But I use the Gex spot. That's the only one I use. But this Discord is free. All right. There's something here, the watch list for SPX, and I'm not sure what all this even is. I might have to go see what they're talking about in this little SPX watch list thing. But I just stay in the Gex spot area. Where'd it go that fast? Okay, any questions here?
I don't think so. I just saw that you're looking at the big bar. It looked like the bars that stick out the most seem to be your places of interest on that GEX chart.
Yes, that's pretty much what we're doing. I did put, there's a video that goes with how to use and read gamma, and I would strongly suggest that you watch that video because I do go a lot more in depth. But you are looking for the big candles because the green candles, the price is going to be drawn. They're like magnets for the green
Yes, I
candles.
did see that video. Yeah, yeah,
Yeah, they're like
they're
magnets. The red candle,
magnets.
the
Yep.
price may go there, but when it gets to the red candles, the dealers are going to try to push it back the other way. So that's the difference between those two. Definitely, definitely, definitely. Okay. Okay, you can use this for any stock. Let me see if I can find, oh, invite people. Invite people. I'm going to get the link, and then I'll put it in our Telegram. Free Discord for Gamma and Gex. Use the Gex bot channel.
May I ask a quick question?
You may.
I'm sorry, I might have missed this, but did
Mhm.
you say what time you start looking at taking that the 1 DTE?
I usually start looking around 2:30, 3 o'clock, somewhere in there. I mean, I don't have a hard time, but I don't start till after 2. But it's I definitely try between 2 and 3. Um, when I've talked to TJ about it before, he told me to look into the 3 o'clock hour to do it. Now on Monday and Wednesday, I'm teaching at 3 o'clock, so I can't look then. So I look in the 2 o'clock, 2:30 hour, but somewhere in there, I think you're fine because we're going out because I'm going out far enough to where I'm not keeping us in the fire. I'm not trying to get us, the max amount of premiums. I believe 2:30 is a good time. If you can do 3 o'clock or 3:30, I think that's fine too. It's just on Monday and Wednesday I can't.
Are
So
you usually able to find at least 50% on both sides?
at least $50.
Well, yes.
Yes. Oh yeah. Oh yeah. Oh yeah. Uh-huh.
Okay.
Oh yeah. Definitely. Now, what primarily will do though is I primarily go looking for the major thing I'm looking for when I'm here is I'm leaning mostly towards that plus minus number plus the M&M plus the delta. Those things are going to guide me. Those guide me more so than that gamma chart or VWAP. I'm looking at VWAP to see where we are. But between those, the plus minus, let me move this out of the way. Between the plus minus number and the well, come on, what way? And What's the other thing I just said? Oh, the strat number. The strat number is and the plus minus number are the main things I'm looking at to see what kind of trend and direction are we leaning towards, so I can make sure that well, I know that even if I'm leaning bearish, I'll make sure that if I'm gonna get closer on one side, it'll be on the call side, and then I'll give more room on the put side because I'm looking from that standpoint. So like I said, when we're looking for that plus minus number, that's over here to the right. For those who are
Mm-hmm.
not know, I'm talking about when I say plus minus number, I'm looking at these numbers. And if the MMM number is here, which it was Thursday and Friday, there was a MMM number. I add that to it to make sure I'm keeping that in mind, right? And I'm also keeping in mind the strat number. So like on this day, went from Wednesday to Thursday, I was looking to say, okay, Wednesday was a down day. This was a 2 down. So I know that I'm feeling like this is more bearish. So I would want to, I could figure I could get a little closer. If I was going to get closer on the side, it would be on the call credit spread side. But I knew I needed to leave more room on the put credit spread side because it was more bearish. So if you're gonna do an iron, I'll always give iron condors, but in my mind, I'm thinking if I'm gonna give an iron condor, I need to leave more space on the put credit spread side because it feels like there's a bearish lean. Then when I went
Mm-hmm.
from Thursday to Friday, I'm looking here. See this big old long wick? Let me know that price was going back up. This
It's
is
a
almost a
reversal.
failed two, huh?
Mm-hmm. A
Yeah,
reversal. Mm-hmm.
exactly a reversal. This is almost a failed two down. So I said, okay, this is a reversal. So that means I can now go closer on the put credit spread side, but I need to leave room on the call credit spread side. So later in the day, I'm using the guiding of the chart and I'm using those plus minus numbers from the option chain.
Mm. What's the highest, or can you even, I mean, can you think of, because it scares me like really bullish momentum or like a big giant gap down, and I've never experienced those yet.
Mm-hmm, mm-hmm.
So, like, and I've heard, what is the largest that you've seen before? Like, because the highest I've seen right now has been like 100, like nearly 100 in a day, but
Yeah, it has moved a lot. Yeah, we've seen 100, I've seen 100, 150 in a day. But we're definitely the market is is in a recovery. Like you see these ones where it has dipped down on these days where it's dipped down, it has recovered. You see, this is a massive down. It went low. This went down to
mm-hmm.
65.50, but then it closed at 66. This is a 50-point recovery in that same day. And same thing here. This is a pretty big dip, but it came right back up. So it's the buy the
Yeah,
dip. We still in the buy the dip movement.
that was
So
the dip. That was the thing that had me nervous. That candle right there, that
yeah.
Thursday candle,
Uh-huh.
that thing had me in trouble.
Yeah, you worried up. But yeah, so I mean yeah, and it's scary to watch because then you're like, I gained. But what helps me too is when we're looking at the gamma, we do know too, I've just been watching gamma enough times now. If when price gets down into the red, the dealers are working real hard to pull it back out of the red and they're putting on more trades to bring it back to the middle. They may or may not bring it back to the green, but they're trying to bring it back to the middle because they don't like it down in the red either. So they're putting on more trades. Let's say we're looking at some of these. There's a lot of red here, right? But if the price starts to slip down into here, where it was 65, when it gets down in here, the dealers start to do all that they can do to bring the price back to this middle. So even when it's falling, and it can and get really uncomfortable, you can see the put volume is here. But even when it does this, the dealers start to put on trades to push it back up. So at some point, you have to kind of at some point it is going to start to move back to the right. It's just when and how much to the right will it have a chance to go to. There has to be some
In a day
catalyst
or two. Yeah.
in a day because well the other thing is SPX is made up of stocks that are that people will buy. So as the price falls and falls into and hits buy orders, those buy orders get triggered, and that's what moves the price back up is buy orders. So Nvidia falls to a certain buy order place, people buy. Microsoft falls to a buy order place, they get bought up. Google falls and gets bought up. Tesla falls, it gets bought up. So that's what moves the price back up is buy orders. And once it falls far enough, the buy orders are just sitting there and they get triggered by price. Nobody's sitting there. They're triggered by algorithms. So at some point they will, it will stop and go the other way. It don't feel like this is Thursday. We're looking at here is this is the Thursday. And there's a whole bunch of red here. You're like, this is ever gonna do. But again, you have to say at some point it's going to turn and reverse. The question usually is this when? When will it go back? Yeah. So yeah, it's hard to watch. It is definitely hard to watch.
Okay, thank you.
Yeah. Oh, you're welcome. Definitely hard to watch. Okay. So that's how I do one DTE. Now, I honestly will say though too, if zero DTE is really where we find strength. That's where I find strength too. One DTE is definitely more risky as far as trades go. So what I will do and I have for a long time, if I'm gonna do a one DTE, I would generally do one contract. I may do one contract, one call one put credit spread, one call credit spread. And if you're gonna do that, and then as you get more comfortable with it, then maybe do more. Or if you are trading SPX and you're testing out the 1 DTE, test out the 1 DTE with XSP, because when I give you those trades, I also give you XSP. Now, where you might not like XSP is the premiums are low. So you may feel like these premiums ain't enough. Once you put both sides on, you're going to pull in $15, maybe 18, maybe 20. That may make it feel a little bit better. That's a 20% or $20 off of one spread is 20% return on that. You're going to turn it off, so you won't keep all that because you're going to close it before the day's up. But maybe try it either in your sim, try it with just one contract, or try it with XSP. If you don't feel comfortable, then don't. Definitely. I hope nobody ever feels like they need to follow me down any rabbit hole. Okay. If you don't feel comfortable or confident with it, just don't do it. All right. And then when the next day when I posted, I closed it, then it'll just be fine. And it's all good. All right, it's all good. The zero DTE is where we find more strength. All right. So if one DTE is not something you're comfortable with, don't trade it. Or if you feel like only one, if you're not an iron condor person and you only want to do one side, and to you, you're like, okay, this feels bearish to me, so I'm just gonna do one side, then totally pick one or the other. I mean, however, I'm just putting it out there for you all to do it however you feel. You know what I'm saying? However, whatever your comfort level is. Okay, I'm just putting it out there. Any trade that I post in our alerts channel, though, I'm in it. So if you can not pick, just know if I post it, I'm in it. Sometimes I'll put trades inside of our regular chat, and I may put the picture or whatever. I may or may not be in those because if I'm teaching, I may not have time to put it in the alerts channel. But if I put it in the alerts channel, it's because I'm in it. All right, that you can use that as your guide to say, is Arlissa here or not? Like one day, I think last week, I put in a trade, a fair value gap trade at 3 something in the afternoon while I was teaching. And I just said, if you're looking at fair value gap, here's the numbers. And I think somebody took the trade and was like, it worked out. I was like, I wasn't in that. I think she said, I was following you. I was like, I wasn't in that though. I just was posting it in case. It worked out fine. But I was like, I wasn't even in that trade I was teaching.
See,
What
you
was it?
mentioned you could put on one side if you want.
Yeah.
Uh, are those one DTE trades typically going to be condors then?
Yeah, generally I'm almost always, if I can, I'm gonna do an iron condor. So
Okay.
yeah,
I didn't catch that part
I'm
in the
almost
video.
always gonna do an iron
Okay.
condor
Okay.
because I love those.
Okay.
So yeah, you see here, even when I put the 1 DTE here, it's you got the call credit spread, put credit spread, and then I gave XSP also. This is the 1 DTE and the 5 DTE. Yeah, I'm gonna give
So,
both
got you. So the expectation is to build a trade with 4 legs then, right?
with 2 legs. Well, four. Yes, it is four. Yeah, yeah, 4 legs. Yeah, yeah, yeah. That's
Okay.
yeah, yeah, yeah.
I
So,
never
but do the two at a time. So do call credit spread, make that a trade, and then do
okay.
put credit spread, make that. Don't put all four at one time.
Don't
That
put all
does you
four
don't
at the
get the
same
good
time.
premiums that way.
Oh, I
Yeah,
didn't know
yeah. You
that.
don't get
Okay.
good premiums.
Okay. Thank you
That's
for
not the
that.
best way to get good premiums. Yeah. Hmm. Yeah, you can, but it's not the best way to get good premium. Tanya said we like a good iron condor now. We like them until they don't like us. But if I can build a good iron condor, you can count on me to be in an iron condor. Cause yeah, I'm trying to get the most out of my collateral if I can. If I can. Okay, so I've talked about that. I've talked about the 1 DTE. I've done some Q&A. If we have any more Q&A? Any more Q&A? Do we want to talk the fair value gap at the end of the day again? Does anybody want us to hit those? Anybody want to hear fair value gap? Okay, I see a
I
yes,
do,
please.
please.
Yep, we can, we can. Okay, let me turn my fair value gap back on. Now, I'm gonna tell you right off rip, okay? I'm gonna tell you right off rip. This right here. Now, we used to do some last minute trades for a long time. This is how we traded for a long time in Power Hour. We used to be on the Power Hour call every day. We did Power Hour like gangbusters. Okay, this was what we did. I have a whole strategy. That SPX playbook was built around that power hour strategy. It did not include fair value gaps though. But now the fair value gaps add a little more juice to what we had. But I'm gonna tell you, it can be scary because I'm basically using the fair value gap as the support and resistance and saying, I feel like it's not gonna go past here. It's not gonna go past there. Okay, let me see. I'm gonna get to, I might have to go grab the screenshots from earlier that I used earlier in the week when I did my post. Because I want you to be able to see do you see what I see? Okay. So, and then now there's more things on here that are kind of in the way. Is that a fair value gap or a regular gap? Because I only want the fair value gaps to be showing. And I feel like that's a regular gap. That it's still here. I don't want that. Okay, y'all, let me get this. Okay, there we go. That's a regular gap. I want to be able to see fair value gaps only.
What's the difference between the red and the green shade? I know
So
both of them fair value
yeah,
gap,
yeah.
but
The red is a bearish fair value gap. So it was created when price was coming down. And the green one was created when price was going up. So green is bullish and red is bearish. One of them was created when price, like this green one, was created when price was going up. So there's a gap between these two candles. There's a gap between, where's my mouse? There we go. There's a gap between this candle and this candle that created this green gap. So it's a gap going up. And the red one is there was a gap that was created when price was coming down. Make sense?
oh, okay, thank you.
You're welcome. Okay, so on the 25th, here we go. So let me make this bigger so we all can see, just in case we're looking at cell phones. Okay, so I was here, this was Thursday evening, and what we see here is There's a 15-minute fair value gap. 15-minute fair value gap here. And there's a 15-minute fair value gap here. So the premise is that a fair value gap is an imbalance. Number one, we got a video about what they are and yada yada. That a fair value gap is an imbalance that needs to be filled. At the end of the day, this 15-minute gap, generally these occur during that power hour, sometime in the end of the day, because price starts to move in a trendy kind of way. So these fair value gaps are left behind somehow because price is moving. The thought is during power, this is what I've witnessed in the last several weeks in power hour, that after these fair value gaps are created, price is going to go back into these gaps to fill them. It's going to see how price went back into this gap. It comes into here, it fills the gap, and then it returns back to where it was. Price went up in here, it goes through this gap, and then it returns, and somewhere it will expire somewhere between the top of the top gap. Okay, somewhere between the top of the top gap and the bottom of the bottom gap, if there's two of them. So now you don't have to necessarily do both sides, because there's other days when there's only one and I only would do one side. But in this case on Thursday, there was two fair value gaps. So the thought is that price would expire below the top of this gap, which was 66.05 is the top of this gap. If you were looking, closely on your chart, the top of this gap is just about 66.05, and the bottom of this is like 65.96 or something like that. It's close to there. So my premise and my thought was price is going to expire between 66.05 and 65.96. So after price came here and ran up, I said, that's when you can say, okay, I can do a put credit spread, 65, 90, 65.95 after price leaves here. So you can get it as price is leaving here. That way you're going to get a decent amount of premiums, because price is going to still be in proximity going up. And then as prices dancing around up in this area, you could get 66.05, 66.10. Now a less risky one up here really would have been 66.10, 66.15. That really would have been less risky. Even though 66.05 was the top of this gap, because price was up here, you really could have gotten 66.10, 15 and still took in 45, $35, $45, which would have been fine for the 10 minutes that you were going to be in the trade. 10 to 15. Okay, that really would have been fine. I had 66.05, which was risky for no reason, because it ended up expiring at like 66.04 something. It was high, 66.04 and some change. But if price was already up here in the vicinity, going with 10.15 would have still gotten like $30 or $35, right? Still would have gotten good money. And I entered these trades like at 350 or 352. It's honestly, I've entered them right around the same time that Vinod gives us his financial juice thing, the thing with the market on, not market on, what's it doing, the MOC thing, when it's whatever MOC, what does MOC stand for? I forgot. It's like the imbalance, the balance thing, that little graphic that he gives us at
Market
350.
order close.
There we go. Yeah, there we go. The thing that he gives us, that imbalance paper. So it's after that. And then now you just got to ride the last 7 or 8 minutes though, which can be uncomfortable. But once you have that, even I'm using the fair value gap as my thought is the fair value gap is going to be filled. See how price went up in there? Now price up here went up in there pretty far. Went up into Yeah, price went up a little higher here than I was comfortable with 66.07, but see how it pulled back and still closed below 66.05 because I felt like it was going to close below the top of this fair value gap. That was a little scary. 66.10 would have taken the fear off because once it got up to '07, I really could have got 66.10 and that would have saved all that fear. But I see your hand. So that's that last 15 minutes or so. And again, this is something if you want to give it some look see, this is something you could potentially look at trying a few times in your sim at the end of the day just to see how it feels for you and what you're looking at when it happens. I saw somebody's hand and then
That
I
was
didn't.
me.
Yeah.
I wanted to seek clarity as to the direction of the trade. You're saying that you're expecting the fair value gap to fill, right? So
Mhm.
are you using the fair value gap as a magnet to price or more so as a barrier that it'll step into that fair value gap and leave?
that it's going to go through, it's going to go into and through the fair value gap, like it's going to fill it, but it will go back outside of it after it does the filling. So in some
Got
cases
you.
though, like this one, this is Friday. On Friday it just touched it and then it went back, but some days it will, like in this one it actually filled it back here. Some days it will come into it and then go back out. This one did that. It went into it, but it didn't close outside of it. It closed inside the fair value gap. So the top of the gap, my thought is that the top of the gap will provide resistance. The bottom of the gap will provide support. So if you're at the end of the day and you're looking at support and you're looking at fair value gap trades, then you can say this outer gap, the outer bounds of these gaps can be your outside of these outer bounds can be your sell legs.
Ah, I understand. I understand. I understand.
Mm-hmm.
Okay.
Yeah. So
So
this
whether
one
it's
here,
coming to fill it or it might reject off the top of it, if you
right.
out the bounds, then you are right either way.
Exactly. So that would have been like 66, 45, 50 call credit spread because it closed at 43. And down here, if when price came down here, if you wanted to do 66, 30, 35, put credit spread, you could do that. So the thought is that last 30 minutes, 15 minutes, something like that. I've not done it in larger time frames. I've only done it like the last 10 or 15 minutes, but I'm believing that it really probably could be done on larger time frames, that you if you had the fair value gaps that you're looking at, that you really could use larger time frames and enter them earlier, potentially take in higher premiums, but you also would have to sit longer and and have to your emotions would have to ride the roller coaster longer. Julie,
Well,
were you
thank
going
you
to
for
ask
that.
a question? You're welcome. You're welcome. You're welcome. How have the premiums been? So I've pulled in like $70 for market on close. Yeah, I pulled in like $70 because you're literally right there at the price. Now it's one, when you see it, you need to take it. This ain't one that you see it and you're like, I'll just wait a minute. When you see it, you need to enter the trade and just be like, I'm doing it. Because because the price comes and it's moving so fast, especially when you're at 350. 350 theta is eating at your trade so fast. I've seen it be at $100 and then wait a few seconds and it's at 50 or it's at 45 and it's decreasing fast because time is lapsing and price is moving away from it. So it's kind of yeah. But I've seen $35, $40. I've seen, $70, $80. It really is going to come to how quick you move and how comfortable you're trying to be.
So will that become a regular occurrence where you'll be posting those?
I have been up till now. I toss them out. I kind of toss them in there. But again, on Monday and Wednesday, I'm teaching at the same time. So I, I, I want to put them in there, but then I also feel like sometimes I don't want to take y'all down with my crazy. Cause sometimes I'm doing stuff like this, like it'll be interesting for the last 10 minutes of the day. Let's do it. And I'm like, I don't be trying to take, I don't want y'all to be like, gee, we lost our money following her. Cause I feel like sometimes I'll do that. I'm like, okay, I'm willing to risk, $400. But that's how I'll be wanting to take y'all with me. So it's like anything else. I guess I could put it out there, and if you want to do it, you can do it, and if you don't, you don't have to. I don't want anybody to ever feel like they have to follow me, though. Yeah. What do you want? What would you want me to put them out there?
Yes.
Yeah.
Because
Okay.
I almost caught that last one on Friday and for the 35 cents, and I had the order pulled up, and I just didn't press the button. And then you're right. As soon as I thought about it for a
Yeah.
second, went back, it was 10
$5.
cents.
Yep. It's like $5.
Yeah,
Nothing. Gone. Yeah.
gone.
Yeah.
Hmm.
Yeah. 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 Yeah.
Do you
But
execute that trade any differently? Like the mechanics of what buttons you press because you have so little time, or do you enter that
Mm-mm.
trade just like you would any other trade?
Yes, any other trade. You just, if I'm looking at it, I'm looking at this, I'm going, okay, because the fair value gap is showing up early enough. And I'm like, okay, I see this, I get it pulled up and I'm still looking at the chart. And then finally I just push the button and I'm just going to take it. And then and generally I will push the button and then take it off the screen because it's hard to watch. But I'll say stuff like, this is where I think it's gonna close. It's gonna close below this or above that. And yeah. So that's the one way I'm been looking at using the fair value gap. At the end of the day, there's other I'm sure there's other ways to use the fair value gap, but that's how I've been. Let's look at like this is the 24th. This was what, Wednesday? So this is Wednesday. This is the red ones because the other two we looked at were green ones, right, Lisa? So now we're looking at these red ones. So you've got these say 1 hour fair value gap, 4 hour fair value gap, and then the fair value gap is whatever time frame you're on, and then the 15-minute fair value gap. So if I'm on, by the time we get to that time of day, I'm on the 5-minute chart. When I get into power hour, I'm on the 5-minute chart. Are we on the 24th still? Nope, here we go. By the time I get into power hour, I'm on a 5-minute chart. So I'm looking here, and my thought here is, see, this fair value gap have been sitting since 11 o'clock. It's been just kind of chilling. The 15-minute fair value, because now we're close to the end of the day. Not that I'm giving one any precedence over the other, but the fair value gap is the one that's closest in time. But you got like overlapping gaps, which let you know that they're stronger. So I would still be looking at the top of this, which is 66.46, but price ended up closing at 6. So anyway, early enough you got this whole thing. So I would feel like you got all this day that the price is based on what you see here. The price was most likely not going to close above 66.46 because even if the price did go up here and go through even, it was going to come back down into here. And it did. It just stayed in here. It didn't even, it went up like you got this high and this high, but it didn't go above this fair value gap right here. It never did go there. The 15-minute, I can't even tell where the 15-minute one even ends, but so 66.4, you could have entered this trade earlier. But when we went down to a 5-minute chart, let me see if there's a 5-minute fair value gap that shows up on that same day. Um, this is the 24th. Keep moving me to the right time. The 24th, where we at? Are we on the 24th? I want to make sure I'm on the right day. Nope, that's the 25th. Okay. Now we're on the 24th at the end of the day. It's a big old daily fair value gap. Oh goodness, where are we? Come on, Cletus. Okay, this is the end of the day on the 24th. And there is no fair value gap showing in the area where price actually is. I don't think I did anything that Wednesday anyway. Somebody's hand is up. Go ahead with your question.
Um, I think you may be in the process of answering my question.
Okay.
You mentioned we're looking at the 15-minute fair value gap for this. But you also said we're gonna like you use MOC imbalance as an additional piece of information. So that doesn't come until 350. So at that point, do we look at different time frame fair value gaps? Do they even change? Like, is there a different fair value gap at 10 minutes versus 15 or 5?
So what happens is the fair value gap indicator that we have running, okay? So the fair value gap one I have running is the one by nephew Sam. Well, did I delete it? That's where I wonder where it went. Oh, I moved it. How did you get moved down there? The one I'm using is the one by nephew Sam. And I don't know how I did that. You put him back up there. So what it does though is it shows the fair value gaps for whatever time frame chart you're on, and it lets you pick other time frames to show, right? So I'm here in the chart. So it says time frame 1 is whatever your chart is. Whatever chart you're on is the time frame it's going to show you. Then it shows you I picked the 15-minute, the 1 hour, the 4 hour, and 1 day. I actually should change one of these to like the 5-minute, because when I'm at the end of the day, when I switch to the 5-minute chart, I can then see the 5-minute fair value gap. Okay, so I'm saying all that to say that when I'm on any given chart, it's showing me all of these fair value gaps at the same time. If there's a fair value gap that is on the daily chart, when I'm on whatever chart, it's going to say there's a daily fair value gap in this area. It shows me all 5 of those fair value gaps if there is one, no matter what chart I'm on. Does that make sense, Julie?
Yes, I didn't realize there was more information you could put in. I just did it and it shows 15-minute fair value gap and
Yeah.
5-minute
Yeah.
on the chart
Yeah.
itself.
Yeah. I'm not sure
Cool.
how I made this go down here. Go back up. I wanted to go back to where it was. I moved it. Oh, here we go. Move to, okay, move up. No, existing pane above. There we go. Where did you go? Okay, so, um, anyhow, so when you're looking on that time frame, you can see and when you're looking here, you can also see that the fair value gap here tells you at the edge here what time frame that fair value gap is from. So like this one has a D fair value gap, and if it's 15 minutes, if it doesn't have anything there, if it just says fair value gap, then that's from the time frame of the chart you're on. So if you're on the 5-minute, like this one says 4-hour fair value gap, this one says 1 hour, this one says 15-minute, and this one here says just fair value, it just says FVG. See right here, it just says FVG. That one basically means that I'm on the 5-minute chart, so this is a 5-minute fair value gap. It's just, if it just says FVG, that's the one that goes with whatever chart you're on. Okay, so by the time I get to the last minute, but by the time I may get in at like 350, but by the time I get to like quarter till or whatever, I've already identified based on the 15-minute, usually it's based on the 15-minute fair value gap. I've already identified the zone that I'm looking at. Even if I don't pull the trigger till 350, maybe, I've already seen the zone though. Does that make sense? I hope it does.
Are you
And
on the
I don't really change the decision, because to me, I'm still not clear on how that MOC data really does. I ain't seen it do like what it says it does. I've seen it move, but it doesn't always move in that direction like the whole time. So yeah. that.
Yeah, it's a bit inconsistent, I think.
Mm,
It
that.
always moves in the wrong direction of where I want it to go. So
Yeah, Lisa, you asking a question?
Yes, are you on the fair value gap? You got the Lux Algo one? Because I see a
I got the nephew Sam one.
Oh, the Lux Algo.
Yeah, so type in FVG. If you go there and you type in FVG, and it's the top one, it's by nephew Sam. Initially, we did have the Lux Algo one, but Melissa told me about the nephew Sam one. And this one is the one that shows fair value gaps on different time frames. And this is, I feel like it's more useful because it gives you those different time frames even when you're not on that chart. FVG by nephew Sam. And again, I really don't, I keep this silent. I have it with the eye turned off most of the day. I may turn it on sometimes, but because I won't say it clouds up, but sometimes I don't want to see this. And I know I'm probably not going to use it until later. I'll turn it back on if I'm looking to see if price is going into a gap or rejecting off of a gap. I may turn it on to look and see at something, but for the most part, I'll have it turned off and then I turn it on when I get into power hour. I'll go turn it on to see what kind of zones I'm looking at. Okay. We got any FVG questions? Any more of those?
Oh yeah, let me ask this question. The difference between the red and the green, is that based upon time frame?
It's based upon the direction. So if the fair value gap was created when price was going down, then it's a red. If the fair value gap was created when price was going up, then it's green.
Gotcha.
So it's a bearish fair value gap or a bullish fair value gap, which helps you to know if it's a bullish fair or green fair value gap and then price goes, down and then up. You just basically the price is going to want to continue the direction it was going. So, if it's red, and price was coming down, it was going down when it created it, and price goes up, it's probably going to go up into it and then go back down. So you need to know that if it was a red fair value gap, price is going to try to continue the direction it was going when the gap was created. I don't see myself trading fair value gaps. All right. I'm too weak for it, child. But in the amazing info for trades, I'm already in. Gives me a lot of info to assess to whether to cut the trade. Now that's true. That's true, Julie. You can use this as let's say you're in a trade and you're in a call credit spread trade, but the price is coming back up and you're wondering, do I stay in here or not? And this fair value gap could be, because again, the top of the fair value gap is going to many times play resistance. And like even this one, price went up into this fair value gap and it rejected into it. It's closed inside of here. What will happen next? We'll have to, wait and see. But price closed inside of this gap. So let's say you were trading this on Friday and your trade was, you had 66.45 even. Let's say you had 66.45 or 66.50 as your strike and this was your fair value gap. Your thought could be, okay, I don't believe it will close outside of this fair value gap. So you could have let you stay in your trade because your thought would be that the top of this gap would provide resistance. That makes sense? Not just for Julie, but for whoever.
yes.
Yep. That would say, okay, we got a daily fair value gap here. Price went out of it, but it didn't close beyond it, which the outer bounds of these gaps, once they're filled, will generally provide support or resistance. Is the fair value gap in Thinkorswim? Yes, it is in Thinkorswim. It is FVG type in FVG, and it's the top one by Nephew Sam. Hey, Elaine, it's been a while since I seen you there. You been on vacation or something? Where you been, girlfriend? I hadn't seen your name.
Oh, I think she was asking about in a different platform. This is TradingView, right?
Oh, this is Training. Yeah. No, it's not Thinkorswim.
Gotcha.
Yes, thank you for clarifying. It is not in Thinkorswim. I went looking for it there. Fair value gaps is a thing that goes along with what's the guy's name?
ICT.
ICT, yes, the ICT dude. And there probably is a script you can add to Thinkorswim, but I've not gone looking for it, to be honest. But somebody probably has created one because ICT is real popular, but it's easier to find the one to do it right here in TradingView. Not Thinkorswim. No, it's not in Thinkorswim. Not that I know of. Not by you just typing it in. Not that way.
Man, Arlissa, you mentioned it. I just wanted to ask your opinion because I've gone down this rabbit hole
Okay.
of ICT in the past.
I've not been down the hole.
It's consumed me.
No, I have not been down the rabbit hole. I do not add this.
Okay.
All I know is fair value gaps. And the reason I end up even knowing anything about fair value gaps is because I was in a class and the young lady they trade SPES and SPX, and they traded the strat and fair value gaps. They use them together as buyers. So as she was talking, of course, I'm a seller, so I kept thinking about it from a seller standpoint, not a buyer standpoint. And then I started thinking, how could I use this same information as a seller? And this is where I've landed. So I have no more desire at this point to go any deeper in ICT.
Yes.
I cannot go any deeper. I listened to one ICT video before and was like, I cannot.
Good.
No.
I'm nervous about that, man, because
No.
it's been it's such a sore wound, you know.
Oh no,
that I'm
not a
scared
sore wound.
that I'm scared to even touch it, man. But
Okay, well, no, I don't want you having any wounds.
but it's a big hole, a deep hole that people can go down, and
Yeah, no.
I'll just tread lightly. That's all.
No, I'm not going down the hole. I like what fair value gaps, what they represent, and what I can see they are imbalances. Those things make sense to me, and I can't go any deeper than that. I'm good. Okay, so we've covered that. Covered our end of day things if we want, and as Julie mentioned, we could use them if we're in a trade. You can use your fair value gaps to help you see whether or not to stay in a trade. Maybe it's coming down or you're in a call credit spread, trade starts to revert back. You're using things like your VWAP and other things, and you may see that the fair value gap is just above it. Once that fair value gap gets filled, you may see that price reverses once, because we do know that gaps do provide support and resistance. That may be just one more thing that gives you reason to stay in your trade, because you're using the fair value gap to let you know that price will still continue the direction it was going once it's filled. All right, let's refresh our minds on our strat numbers. Our one number is an indecision candle. Basically, a 1 is a candle that is inside of the previous candle. Here we got a 1. 1 is lower than and higher than the previous candle, right? It's when I say lower than the high, higher than the low of the previous candle. It's inside of its previous candle. Then you got another 1 here inside of its previous candle. A 1 candle is an indecision candle. It's basically a candle that we're chilling on until it gets breached, until it gets broken, until it breaches to the upside or it breaks to the downside. A 1 candle is a candle that we do nothing on, right? You've got a 2 down candle, which basically means this candle is lower than its previous candle to the downside. The bottom part is lower than its previous candle. That's a 2 down. right? This is a 2 down candle. And then next to it, you can see there is a 2 up candle, which basically means the high of that candle is higher than the high of the previous candle. That's a 2 up candle. A 2 up is it's higher than the high of the previous candle. That would be a 2 up. The high is higher than its previous candle. That's a 2 up. You got 2 downs, 2 ups, right? And then you have a 3. A 3 candle is where the upper of the 3 is higher than the previous candle and the low is lower than the previous candle. That's a 3. It's an outside candle, basically. 1s, 2s, and 3s is all we do in the strats. 1s, 2s, and 3s. Now, we look on the strat for reversals. We look for reversals. 2-2 reversal. 3-1-2 reversal. 3-2 reversal. We got a few different things inside of our Telegram that you can look at for our reversals. So, how do I use this for IWM? Now, what I like about IWM is IWM does not close trading until 4:15. IWM does not close trading until 4:15. So after 4 o'clock, our SPX is over, right? I can take a quick look at the daily chart for IWM to see where, what is the day's candle for IWM. Now, it's only got 15 more minutes, so it's not going to do a whole bunch more moving in the last 15 minutes of its trading day, especially because all the rest of the market is closed. IWM, SPY, and Triple Q are still going for 15 minutes. So I look here at the candle, at the daily candle around 4 o'clock, 4:05, somewhere in there. Usually when I remember, I go and check it out. And I'm looking to see, what does this candle tell me as far as the next day? Are we setting up a combo? Is it setting up some type of combo for the next day? Right? So this candle would this be a failed 2 up? This would be a failed 2 up. Yeah. This is how it goes. Red candle with green, or red candle with green number. It's a 2 up, but it's red. So this candle would be called a failed
2 down.
It's a failed 2 down or failed 2 up. It's a failed 2 up. Failed 2 down would be going the other way. Basically, it's a 2 up, right? So it's a 2 up candle, but it's red. It's a red candle. So it was a 2 up candle should be green. It was going up. It should be a green candle. So it went up. This was the day that we went to the all-time high on IWM, and then it pulled back. So it's a red candle, but it's a 2 up candle. This is generally a bearish candle. In this case, it definitely is, right? I of course, didn't know what was going to happen these next 3 days because they hadn't happened yet. This is a failed 2 up candle. So I'm looking at this on Tuesday. This is Tuesday, to say, okay, this is a failed 2 up candle. So if I'm going to do a 1 DTE for tomorrow, for the next day, which would have been Wednesday, and I believe this is a failed 2 up, which means this is a bearish move, then I can look for a call credit spread for the next day. 1 DTE. What would I use for strikes? Yep, you can use we could use Delta if we'd like. According to the strat, you use the top of, or the outer edge of that same entry candle would be your strike. You would use the outer edge of that candle. So you would go with 247, 248, because that candle is like 247 and some change. I would encroach just a little bit. 247, 248 as your call credit spread for the next day. And I would enter that before 4:15. So this is now we get 1 DTE. I'm after 4 o'clock. One spread, right? Based on the strat numbers, not based on whatever. We're based on strat combos. So this is, I said the other day that I have been looking at a 1 DTE strategy for IWM. This is small cap. So all this week and last week, actually, I've done this every day. I think I put it in our chat a little bit. A couple of times I might have put something in our chat. It's been quite successful. But I have to do the stuff on my own. I can't take y'all with me first because I have to, I don't want nobody to be like, you have us losing our money. I
So,
don't ever want that. I don't ever want y'all to
no,
lose money.
may I ask something for clarity there?
Yep.
So that I see the signal twice,
Okay.
right? The candle you have circled is a 2 up, but it's red, right?
Yeah.
If I go 2 candles to the left,
Yes, this one. Same thing.
right there, that's a 2 up, but it's red as well, right?
Yes. Uh-huh.
And I could have, on that same day, if you could put your cursor on that candle there, what day of the week is that?
That was that last Friday.
Ah, so now that's a little more than 1 DTE though.
Well, it's still a 1 DTE. It goes over the weekend.
Oh, it's still 1 D. Okay,
Yeah.
got you.
Yeah.
So at 4 o'clock, this session, this ticker still trades.
Yes. It's trades
And
till 4:15.
so I could be looking at this at around 4 o'clock and saying that a big red candle and it's a 2 down it's a 2 up that is
Failed 2 up.
red.
Yeah.
So that's signaling bearish behavior. So I'm going to buy a strike that's at the top of that red,
You're gonna sell this
right?
here. Yep.
A
Mhm.
call credit spread at the top of that red, and it's going to expire. And look at what happened on Monday.
Yeah, exactly.
If you move your cursor one to the right, it didn't
Mhm.
go to the top of that.
It didn't.
I would
Yeah.
have been all right. Okay.
Would have been all right. So if you had used the one he's talking about, if you had done this one, the top of this candle was like 245.50. So you could have done either you could have done 245. You would have been safer to do 246, but you could have done, oh goodness, 245, 246 call credit spread here. You could have done that because you're gonna close it, and it gapped down a lot because it opened down here. So it from where it closed, which was here, it closed here and then gapped down to here. And then it went down some more because it went down to here. You probably could close that because you got time decay happening. Probably could have closed it before it ever got way up here. But so each day, 1 DTE, 1 DTE, 1 DTE, right? So the next day you're looking each day to say, okay, now what? So now this next candle. Okay, let's go. We're still using our strat. The next day would be this next one here is a failed 2 down. This next green, the green candle with a red number. This one is a green candle with a red number. This is a failed 2 down. This is a failed 2 down candle. So then what you would do here, again, 1 DTE, you could do at the bottom of this candle, which is about 241. So you would have done 240, 241 put credit spread. 240, 241 put credit spread. And what happened? Price gaps up to here. It ran up to the 247. Again, by the time it does all that, you got your trade closed. You're gonna close it for $2 or $3. Whatever you took in, you're closing it. And then it comes, even if you let it go all day, it expired at 243. We've had 241, 240, 240, 241. So you're doing day to day. You're looking at the candle. I would tell you these, okay, because I know we're still learning the strat. So um looking at these, what's the next day? This is a failed two up. The next one, this is still a two down candle. So I actually did call credit spread still going down, and it did just that. Now another failed two down. So I did put credit spreads the next day because this is a bullish candle. Put credit spreads going up the next day. And then there's that. Now I got something else for this Monday because I've done it every day. At the end of the day, I go check it and say, okay, what's next? I think Friday what I did was I got another put credit spread under here. So I think I got like 237, 238, something like that for tomorrow. Tomorrow. Tomorrow is Monday.
You said
One,
just do
one.
one contract though, right? One contract to
You
start
can
out, right?
start with one. Start with one. Of course, I do more than
Okay.
that now because I've done it enough times, but definitely start with your one until you get comfortable. I don't want anybody jumping out there with no, a whole bunch of stuff and then you look up like, no.
And
Just start with one. Hold on, I'm
can
coming
you give
back
me
to it. Give me a
some?
minute.
Oh,
I've
sorry. Go
got
ahead.
234, 235. I got 234, 235. I'm way under there. I'm way down here. What was your question?
What threshold does your account need to be at before you start going over to SPX and you leave XSP alone? Is there a number you like to see in your account before you start it don't matter.
That's really up to you. Because we've had people in this community who started with $500 and said, "I'm trading my $500 if I lose." Starting with the 500, and the mentality is, if I've got $500, I'm willing to walk away from it. I'm gonna trade this. And there's some people who have come into the community with 20,000 and started with $500, and they got plenty, and they still started with just a little bit to just trade it. So it really is an individual choice. It really,
Thank you for that.
it's a choice. It's really kind of like, no matter what you trade with, you need to be willing to walk away from it. I always say that. Well, no matter what you're trading with, you need to be willing to walk away from it because the opportunity to walk away from it is there. Is there. But yeah, it's up to you. It's really, it don't have to be a threshold. It's really up to you. If you've got, 500 or 1,000 or something, you think you want to trade with that and say, I'm just trading with this. I'm going to give it what I got. And the plan, of course, is to, after 10 to 12, 15 trading days, you do want to be able to double that money because if we trade consistently, that money will double.
Talk about it. Yes.
Yeah,
Double that money.
it
Yes.
will double.
Yeah.
If we trade consistently without any losses, it will double. It will double. Questions about the IWM 1DTE. I like the thought of it because we get the time after the market closes to look at it, and it's strat based because we can look at it there. You get you get something to lean on, not just, because even here, we're on an upward trend. So even though this is an upward trend, right, we're still bullish. But you see from day to day, if you were just doing all put credit spreads, this one here might have got you this Thursday when it gapped down so much this Thursday, even though it recovered, depending on where you were from the Wednesday to the Thursday, this bottom trade might have gotten breached. So going with the strat from day to day is going to, keep you at a safer place, taking in $10 to $15 per contract, one contract, two contracts, three. This is cool. Yeah. Another thing we could do, we can look at too is if we look at XSP at the end of the day, like just before the day closes for the 1DTE, that's another but I like this IWM as a if you want to be an addition. It's looking at something different because SPX and XSP is covering all of those tech and all of those stocks, and IWM is a whole different bucket of stocks. So it's really us exposing ourselves to two different areas of the market, not just the same, not like more of the same. SPX and XSP, if we trade both of those, we're trading more of the same. It's just one smaller. But if you trade SPX and you're trading IWM, or XSP and IWM, you're trading two different buckets of stocks.
Now that IWM is not cash settled though, right?
It's not, which is why we're doing a 1 DTE.
That's a good
Why
point.
we
Okay, so
carrying it
there's
overnight.
no risk of getting assigned still then, huh?
Right, not overnight.
All
No,
right.
not like that. So the next day you get in there and you gonna close it on up. And you're not PDT hacking. We're not doing none of that with IWM. No, no, no.
Okay.
No,
And
no,
so
no.
I can, as long as I
It's got
close it
shares.
the next day, I'm sorry to overtalk you.
That's all right. It's got shares. So you're not leaving that on. You're closing that up.
And I have until 4:15 to close that thing,
You
right?
do have till
Okay.
4:15. The broker, though, this is the thing, even though you do have till 4:15, the broker is going to run a risk assessment around 4 o'clock. So even though you do have till 4:15, the broker is going to run their risk sweep at 4 something, at 4. And if your trade is looking like it might be too close, they'll close it for you.
Absolutely. And they might charge you for that too, if I'm not mistaken.
They'll charge you a day trade if you're on the same day. But if you've got a 1 DTE expiration, they won't do that
Uh-huh.
until
Oh,
if
I
it's
thought
on the
they charge
same
you a fee.
expiration.
I
No,
thought if they have to
well,
close a trade for you, I thought they
Trade
charge you for.
Station might. Trade Station
Ah,
might, 'cause they do
okay. Okay, thank you for that.
that. Trade Station might. Yeah, Trade Station might do that. Thinkorswim doesn't do that. Yeah. What else we got? This was a lot. This was a lot of good stuff. We talked SPX, we talked fair value gap, we talked VWAP and Discord, free Discord, we talked 1 DTE, and we've talked IWM 1 DTE.
Have we already gone over any like calendar events that we should be mindful of this week?
We went over them on the call earlier, but let's hit them again. We've
I'm sorry, I
got
missed that.
no problem. The only thing I see, let me clear these things in front of us. The only thing I saw, we got a couple of 10 o'clock data points this week. So Monday, nothing really happening there. Pending home sales, 10 o'clock on Monday. FOMC people are starting to speak this week. They had, they kind of get muzzled for a couple weeks before and after the announcement. So they're starting to talk in places this week. Tuesday at 10 o'clock, we've got PMI and JOLTS job openings. That's 10 o'clock Tuesday. There's a 10 o'clock Wednesday PMI and something before the market on Wednesday. Thursday, you got 8:30 unemployment red folder, and then Friday, 8:30 and 10 o'clock. So you got about 3 or 4 red folders this week that are coming, but they all happen in the morning. So if you wait till, afternoon trading, if you'd like to do that. Earnings was real minimal this week. Only thing that was, I would say big is Nike. I wouldn't even call that big. And Carnival Cruise Line is tomorrow morning. But the earnings season is winding down for Q3, and it'll pick back up probably in about a week with the banks. The banks will pick back up here in a minute. But not a whole lot from that standpoint. Uh-oh, I didn't mean to close us all the way down from there. Yep. I think we got good opportunity. I'm starting tomorrow in E2T University. We're going to be getting deeper into our charts. We're going to go into starting with the charts and looking at gaps and moving averages. We're definitely going to start going much deeper into charting technical analysis. And I'm looking forward to that because I know that that's a place where we can all get, those who are in E2T University can get more knowledge and more confidence. You can still join if you haven't signed up for E2T University. You can still join it at the half price, at the 740, 748.50. You can still join it for half the price if you'd like to do that. Okay? If you,
Wait,
and
two,
come on.
we got. Sorry,
Go ahead, Avery.
I was saying you're running some giveaways at the end of the class. Is that every week? Are we gonna have a chance
No,
to
No, giveaways
Oh,
was last week. We gave them
that's
away
it.
last week. Yeah, I gave away 5 things. I gave away 5 bonuses.
Okay,
So no,
I
we
was,
ain't giving away every week.
hey, oh, I'm thinking we give it away every week. Oh, my bad then. Okay.
I'm giving away knowledge every week. I'm giving away knowledge.
You right. You right.
Did we go through the credit spreads list? We can. Let me see. Where is our credit spreads list? I put it in. I don't. Did I put it in our chat? Or maybe I didn't. How about we do that? How about we put it in the chat? That way it'll be there. Y'all will be there. Where are you? My mouse. Oh, there you are. I think. There we are. We got a long trades list for this week, but I'm in Amazon. Amazon is showing up as a neutral this week. So Peakbot put me in there. Apple's on the list, AMD. I'm in Amazon. I told you that. We traded Baba last week. It turned out Baba actually gave pretty good premiums. I'm in Google. Nvidia's on the list. Upstart is on both lists for those. We used to trade Upstart all the time and then didn't stop trading it all together. Walmart's on the list. XSP is here as a weekly. 671, 672. Disney's here. Adobe. So here's our list for the week. I put it into our chat. If there's some that are of interest, many of them are 2.5 spreads. But if you got some extra capital, maybe you put some extra capital on maybe your 1 DTEs on the IWMs for this week. But I like, Apple, some of the big boys are here. Apple, AMD, Google, Delta Airlines is here, which is a good one. Amazon is here. My Amazon last week got breached. I have to use the same strategy for my weeklies that I do for my 0 DTEs, and that is when the short leg gets breached, I need to close it and not wait. I need to just go on and close it. Even though sometimes, it's like I got 2 more days, I'll just leave it and then it don't recover. But both things have happened. I've done that. I've closed it and then it recovered the last day, or I've left it and then it breached. So left it breached all the way. So I have to just follow the trading plan that I've written and not be leaving it to see.
Do you think we could, would it be appropriate to use the fair value gap, like the daily and weekly on these credit spreads as well?
Yeah, I mean, why not? I think that would probably be good. Y'all can still see my screen, can't you? Am I still sharing? Am I still sharing my screen? I don't think I am.
No.
I don't think I'm sharing my screen. I don't see why not. Yeah, I don't see why not, Julie. That probably would be good. I thought I was sharing my screen. Sorry, y'all. But yeah, I think a few things. One of them, you could use your fair value gaps with these. We could also use strat numbers, because if you're looking at the daily or the weekly, right, and you see that it triggers going up, let's say from a strat standpoint, and it triggers a weekly or triggers a daily going up, then you can ride with that, put that trigger to be an entry for a put credit spread, or triggers a call, could be your put credit spread entry. If it triggers a put, then you could go with the call credit spread. Did I say that backwards? I think I said it backwards, but yeah, I think you could use either one. Yes. Yes, I think those go right along with, we could use our fair value gaps. We could use the strat numbers. Yeah. All righty. What else we got? I thought I was sharing it. This list is in our chat though. Now that it's I put it into our Telegram.
Oh, Arlissa, this is Dara. Hi, good evening.
Hi, how you doing?
I just wanted to ask, does Netflix ever wind up on Peakbot's list, or is that considered like too high risk?
I think the price gets too high. Like is it over $1,000 now?
It is over $1,000.
Yeah. Because
1,200.
Costco was there, and once Costco went over $1,000, it was off their list. So same thing's happening with Netflix. Once it goes over $1,000 for the price, it's not on their list anymore.
Okay. Okay. I was just yeah, I was just wondering because I've been doing a Netflix
Hmm.
spread for the past 2 weeks,
You did
and
a 5 spread?
I did a 5 spread, yes.
Okay.
And that was, working out. It was working out pretty well. I mean, I know the numbers are up there, but the premium is
Also up there.
pretty good, a good ways down the chain. You know what I mean? So
Yeah, yeah, yeah.
will have to be that close. I mean, of course, it could move 30 points. It don't have
Yeah.
no problem doing that, and you could be, your feelings could be a little rumpled.
So yeah, let's look at Netflix. If you're looking, yeah, definitely a Fox spread. So if you're looking Netflix, is it bullish or bearish at this point? Let's go look at the chart.
Oh, I mean, well, yeah, it's kind of, I mean, on a larger time frame, it's kind of like in a big potential bull flag. So it's but just been in
Okay.
consolidation in this range.
It looks like it's consolidating. Yeah, it's looking flat.
Uh,
This
So I was able to be
that
like 40 points out and still
yeah.
collected like $1.
I would see 1264 or something higher than 1231 and below you can go right below this, right? This moving average at 11 something, maybe even 1192. Probably could do an iron condor. It's kind of consolidating. But let's look at if you went out like 1175 if you wanted, and that would definitely be, or this is where you can use your plus minus numbers too. Plus minus, and you got the MMM. This is another good example of how we use this plus minus number, which is 34, and you add it to this 14. So now we're talking about what, 48, 49, something like that. So you add it and subtract it to your 1210. So to add, let's say 50 to that, puts you at what, 1260. And if you take away 50, it puts you at what, 1160?
Mhm.
If you take away 50, yeah. If you
Yeah.
add 50 and take away 50, so 1160 and 1260. So if you went down to 1160, that's an 87. I probably would get a little closer. But if you're gonna do both sides, it's okay. 11. Or if you go up here, there's a 2.5 spread on the top. Let me get a little few more. Let me get some more strikes. If you go to the top side, it becomes a 2.5 spread. Looks like, hey, come back here. Okay,
Yeah, I
where
think
are we?
I've done it like 2 weeks in a row. One week, the first week, I mean, yeah, I think I collected, I think I bought it back at like 5 cents or whatever.
Here
I
we
bought
go.
1170, 75.
1260 pays $112 and 1160 pays another 92. So $200 for a 5 spread. That's a good little 40% return.
Yeah.
It is a pretty good return. Tanya, are you on this call?
Yes, I'm here. Sorry.
Did you hear how we need to get our pen?
Get our pen. Wait, I'm sorry, I missed it.
You know how we have to get our pen when we see stuff that needs to be written down?
Oh, yes, yes, yes. I'm sorry.
So Dara was just talking about the Netflix trade, maybe 1160 put credit spread and 1260 call credit spread.
Okay.
It's
All
about
right, let me get my pen.
it's about a 40% return for the week. That wouldn't be bad. Oh, I'm on the wrong.
Not at all.
Yeah, I'm on the wrong date. But yes, that wouldn't be bad at all. I agree. All righty. We'll take a look at it in the morning. In the morning. Okay. Anything else?
I watched that video. This may be out of the bounds of this call because you mentioned it in a class call. So
That's all right. Go
my
ahead.
I watched your starting with the chart video,
Yeah.
and as somebody who has been traded for a long time, I was gonna skip it because I'm like, man, you know about every chart. I done seen every chart,
I don't know what
and
happened.
I saw some charts I've never seen before. I said, what type of chart? I think you said there was 9 types of charts. I said,
Yeah.
I've never seen. I heard of candles and I heard of lines and I heard of bar chart, but there was some charts in there I've never seen in my life.
Yeah, yeah, that's
So,
true.
you should never make any assumptions around what you think you know. And I said, just go ahead and watch it. And if you
Yeah.
know it all, it's just a review.
And right. True.
And I actually got some not something that really stuck out to me was you need to be able to look at a chart and make decisions quickly. You can't be drawing and putting everything and then you drawing up the chart and then now you don't know what to do
Yeah.
because you have so much stuff on it. So
Yeah.
it was some of the stuff around executing quickly that I really
Mhm.
enjoyed.
Mhm. Yeah, that's for me because for me, if I have too many things on my chart, I cannot. It's the way my focus is set up. It's too much. Um, so I have to keep as minimal things as possible, even though you do see I have 4 or 5 things going. But now I've gotten used to the cloud for VWAP, and I'm used to the moving averages. But you'll see I'll close fair value gaps off sometime until I need them, and then I'm looking specifically at them. But I can't have a lot of stuff. All those RSIs and the things. If I got to remember what it's supposed to do, and I can't do all that either. Nope, cannot. All righty. I'm gonna wrap up, y'all. Anybody need anything else?
Thank you so much, Arlissa. Appreciate you.
All right, you are welcome. You are welcome. We'll be on in the morning at 8:30. All right, we'll be there. And if y'all need something, y'all know y'all can find me in the chat. Okay, this has been a good call. Been a great call.
Thank you. Good
Thank
night,
you,
everyone.
Coach. Bye, everyone.
Good night,
Goodbye,
all.
everyone. Bye bye.
Bye, everyone. Thank you.
Uh-huh. Bye bye.